Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, October the 24th. I'm going to take just a brief minute to discuss what markets did last week, as it was 7 straight positive weeks in the equity markets, with the S&P 500 finishing the week up 85 basis points, or 0.85%. The mid-cap index did a little bit better, up 1.42%. And the small caps, as measured by the S&P 600, were the leaders of the week, up 1.80% on the week. And now, like I said, we had 7 straight weeks of gains in the market. It's been a great recovery for the market. We've really seen a broadening out of the market. Smaller indices are outperforming larger indices in the last 7 weeks. Everything has been great. Now we fast forward to this week, and we're taking a pause. We're now less than 2 weeks away from the upcoming U.S. presidential election, and that has a lot of professional investors and retail investors and investors taking some profits and putting cash on the sideline, which is not necessarily a very bad thing to do, or it's a very prudent thing to do this time, because if I were to tell you I knew the outcome of the upcoming presidential election in a couple of weeks, even if I knew the outcome, I wouldn't know how the market is going to react to that outcome and that very outcome. And so what you're seeing happen this week is you're seeing a lot of positioning. It's not heavy selling volumes. The volume is not very high. I mean, there's not a rush to get out of equities. You're just not seeing a lot of buying pressure in. So you're having average volumes, but the tendency is to the downside, the sell side, to raise cash, to position yourself to see how the outcome comes, and then allocate cash accordingly depending on the outcome of the upcoming presidential election. And that's what you're seeing in markets, and that's why you're seeing a pause this week. Again, I will point out, we have been up 7 straight weeks. A little pullback here, very healthy, very normal, but just explaining what's causing that this week, as well as the interest rates in the 10-year have ticked up all the way to 4.25%, even as inflation is coming down. And that is one of the reasons it's been holding stocks back from moving higher. But what I want to talk about also today is it's our favorite time of the quarter, is earnings season, because really at the end of the day, we have presidential elections, we have all these macro issues, these wall of worries that we climb, but ultimately what we're trying to get down to are, what are corporate earnings like? What are their prospects looking for the next quarter and the subsequent quarters following that? Is there growth or is there contraction in corporate earnings? That's what drives the market higher. And what we're seeing so far is we're seeing great earnings. We started out with the financials first, and for about the last 2 weeks we've gotten financial earnings. The earnings have been incredible. The financial sector is actually beating the overall index this year. The index being the S&P 500. So the financial sector is outperforming the S&P 500 as a whole. And then I told you that going into the beginning of the year that financials would be a leading sector. You might have laughed at me and said there's no way, that we have an inverted yield curve. There's so many question marks about the U.S. economy. Are we going to dip into a recession? What about all the commercial loans on the balance sheet? All of those worries, and yet here we are. Great earnings, great prospects. The economy is doing well. We're anticipating about a 3% GDP for the year, with inflation at 2.5%. So GDP outpacing inflation. Those are also very good indicators for the economy. We've started to get some industrial and tech names in earnings. Those earnings, for the most part, have been very good. Big beats and very good guidance, even with an election coming up, and you're seeing positive reaction in the stock market. The other thing I wanted to talk about too is the technical indicators that we talk about. We talk about money flows a lot, but our money flows are very strong and they are very positive right now, really showing the broadening out of the overall equity markets and showing that the cyclical sector may outperform maybe the tech sector, some of these that have been leadership for a while, as you start to see the market broaden out as earnings continue to hold up and are good, as the economy is good. So if you have questions about how to navigate this time or this earnings season, next week is a crucial week for earnings. It'll be big for the NASDAQ, as we get a lot of the big mega cap tech names next week. We get Alphabet, we get Meta, we get Microsoft, we get a lot of big names next week. We get Amazon, so we'll get all of those next week. but all indications are earnings are good. So if you have questions how to navigate earnings season or how to navigate this time with the presidential election coming up or how to position your portfolio moving forward, we'd love the opportunity to speak to you. We see things moving forward in a good direction with great earnings. So you feel free to give us a call at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.